made it plain. Come on out of the rain and live with me again. Oh, right in the middle of a challenge, leave the past behind. Keep it moving, gotta move on past the past. Keep it moving, keep on moving. Say you wasted a little time, but he's always on your mind. Gotta keep it moving, keep on moving. Don't ever stop moving. Gotta keep it moving, keep it moving. Right in the middle of a challenge, feeling sorry for yourself, worrying, can't seem to put it on a shelf. Can't find the answer, can't put the past behind. Dwelling on it, can't get this guilt out my mind. Moving, it moving. Keep on moving. Consumed by the circumstances and what I become. Only thinking about my problems, and I'm always on the run. I'm tired, I'm lonely, gotta find a better way. I am calling on you, Jesus. I'll do whatever you say. Keep it moving. Leave the past behind and leave the shame alone. Moving. Keep it moving. Move on. No more sorrow. Leave the shame alone. Leave the shame alone. Leave it alone. Think about, gotta think about tomorrow. 'Cause Jesus is the cornerstone. He's the cornerstone. Gotta keep on moving, moving, moving. Gotta keep on moving. I finally got the message. I wasted a lot of time. I moved on from these chains, had me all in a bind. I'm thankful for freedom. I'm grateful to my God who loved me and saved me from the chastening road. Leave the past behind. Everything will be just moving. Keep it moving. From every stain, my God has made it plain. Come on out of the rain and live with me again. Oh, right in the middle of a challenge, leave the past behind. Keep it moving, gotta move on past the past. Keep it moving. Keep on moving. Say you wasted a little time, but he's always on your mind. Gotta keep it moving. Keep on moving. Don't ever stop moving. Gotta keep it moving. Keep it moving. but he's always on your mind. Gotta keep it moving. Keep on moving. Don't ever stop moving. Gotta keep it moving.
Well, hello, everyone. That's right. We have to keep on moving. It is the middle of the week, and no matter how you feel, you've got to keep on moving. People depend on you, of course, and God is for you. So we have to keep on moving. Good afternoon, everyone, and welcome to, of course, another edition of Winning Wednesday here at Birmingham Bible Church. Thank you so much for watching. Thank you for commenting. Thank you for sharing. Thank you for listening to us on today. Of course, we always like to say we do what we do here on Wednesday because we want to keep all of us, we need to all be educated about something. We need to be informed. And then we want you to share the knowledge to everyone, of course, that you know. And we have great topics. We started off with a bang here in the month of January. We had Janice Anderson. She talked about getting our minds right. Go back and listen to that. Pam Sigmund last week talked about getting fit. She is our fitness and Zumba instructor, and she really taught us how we need to be fit, how to get your BMI. Why is it important to be fit? The different types of exercise and activities. It was great. Go back and watch that as well. But on today, we have another topic. It is, and we have to get ready for it. It's the inevitable is coming. Some of us dread it, and some of us love it. But we want to prepare you on today for preparing your taxes. We have to do it. The Bible says, "Render unto Caesar what belongs to Caesar." I believe Jesus said that. That's in red, so he said it. So we have to give the IRS what is due unto them. So on today, we have Debbie Snelling. She is an experienced tax expert. She's done our taxes for many, many years. We were on here talking. I can't believe how long she's done our taxes. We were in Georgia, living in Georgia when she did it. And so I think she's expanded, and now she's in several states. And so she is from North Georgia Tax Solutions. So please welcome her on today. Listen, if you are on Facebook or on YouTube, I'm watching those closely. So if you have any questions, please put them in the comment section so that we can hopefully get those addressed at the end. So hello, Debbie, how are you?
I'm good, Pam. How are you?
I'm doing wonderful, doing great. So before we kick it off, so just kind of give us a brief introduction to who you are, and then of course we'll let you talk about how people can contact you towards the end. But just what locations you're in, what states you're in.
Well, we do taxes for clients across the U.S. So we've got clients in Washington State, Texas, a bunch in Florida, a bunch in Alabama. But we are North Georgia Tax Solutions. We're headquartered out of Woodstock, Georgia. We have physical locations in Woodstock, Georgia, Jasper, Georgia, and Blairsville, Georgia, which is basically North Carolina. So we do a whole bunch of North Carolina returns as well. We also have a sister company called Florida Tax Solutions that has an office in Tampa. So I was just down in Tampa this weekend where it was cold. It was freaking winter. I had to scrape my windshields with my credit card. So I was not too happy about that. But I've been doing taxes, accounting and tax for the entirety of my career, which is 35 plus years now.
Wow.
And we've got a staff of, during tax season, we'll have a staff of about 10 or 11. The rest of the year, we generally have 6 or 7 people working for us. So we are a small firm with a lot of locations because a lot of times people like to show up personally, especially in smaller towns like Blairsville, where it's an older population. But for the most part, most of our clients are sending us their stuff electronically through our client portal, which you can see on our website, ngtaxsolutions.com, N for North, G for Georgia, Tax Solutions. I had to laugh. Somebody was in my desk the other day and they said, they're like, not one solution. I said, that's right, many solutions.
Solutions. Yeah.
And then I provided them with 5 solutions that day that they needed to be taken care of. So, so we're a good firm. We are not a prepare while you wait firm. We are a send it to us and we do your taxes, and that way we focus on tax minimization. So while you talk about render unto Caesar, and not a penny more, not a penny more than you
There we
have.
go. There we go. I know that's right. Well, from personal experience, you've done such a great job. Your people, everybody is on point. And so of course, kudos to everybody you have working for you. You have done just a great job with handling our stuff. So
thank you. We really enjoy you. I can't say Lady Pam without saying it the right way.
I know it. Let me hear it.
Lady Pam.
Every time. All right, David. So what you got for our viewers on today? Tell us what's going on, what's coming down the pipe. Just go ahead and you can start your presentation however you want to.
So the first thing is that everybody needs to expect much smaller tax refunds this year.
Oh boy.
And there are a lot of reasons for that. The biggest reason being the reduction of the child tax credit. So the child tax credit for 2021, because they were trying to spur the economy and awaken people from the COVID years. In 2021, the child tax credit was $3,000 per qualifying child who was under the age of 18. And then there was also a second $3,600 tax credit available for qualifying child under the age of 6, and they were fully refundable. Well, now we've kind of gone back to the economy's doing well, and the feds are trying to slow down the economy, and so is the tax code. So for the 2022 tax year, the child tax credit is $2,000 per qualifying child under the age of 17. So remember, last year was under the age of 16, under the age of 18, and then a bigger tax credit if under the age of 6, and it was all refundable. For the 2022 tax year, it's $2,000 per qualifying child under the age of 17, and of that, only $1,500 is refundable. So the first $500 can go to reduce your tax from $500 to $0, and then $1,500 can be refundable. But if your total tax was $800, you're going to get $300. $500 will come off, and then you'll get a $1,500 refund. So so that's going to be a big difference that is going to make everybody's going to yell at us like we wrote the tax law. We did not.
Don't shoot the messenger.
We would do it differently. The second big change that people are going to see, also there's a dependent care credit that I'm going to talk about in a minute. But the second big change that people are going to see is that in 2021, you were able to deduct $300 if you were single, or $600 if you were married filing jointly, for charitable contributions, even if you did not itemize. Again, now we've gone back to old tax law. The only way you get a charitable deduction is if you itemize deductions. So people are going to be disappointed to know that they can't deduct the things that they've given to, say, the Birmingham Bible Church. So, or Goodwill, or whoever it was. So you can only take a charitable contribution if you itemize deductions now. That's going to be a big difference. For businesses, another one that you're going to see if you itemize, the provision expired where mortgage insurance premiums could be deducted like mortgage interest. So only matters if you itemize. If you don't itemize, just ignore this part. But now that's no longer a tax deduction effective for tax year 2022, calendar year 2022.
So Debbie, for the deductions, are you saying, can we put Goodwill, $1,200? You're saying we can or cannot do that?
Only if you itemize. So the standard deduction for 2022 for a single person is $12,950. And for somebody who's married filing joint, it's $25,900. So you're only going to itemize if your total deductions, mortgage interest, charitable contributions, state taxes exceed those limits, $12,950 or $25,900. Those are big honking numbers.
Right.
So if you don't have a whole lot of mortgage interest or a whole lot of charitable contributions, and we've seen people, we've seen people with $10,000, $20,000 of charitable contributions, but that's the exception rather than the rule. Most of us are in a smaller tax bracket than that.
Right. Yes. Yes. Okay. All right.
So only if you're above those limits would you be looking to itemize then.
Okay.
Unemployment benefits. Remember that in 2020, the first $10,200 of unemployment was not taxable per taxpayer and spouse. So if you were married filing jointly and you both got unemployment, you could exclude up to $20,400. The IRS announced over the weekend that they had finally processed all of the refunds for the 2020 returns for that. But in 2021 and 2022, unemployment insurance is fully taxable. So a lot of changes that are not good. I see that face. A lot of changes aren't good for taxpayers, but they're good for Caesar.
Yeah.
Also, the premium tax credit, commonly known as Obamacare, and the refund that you get or the extra tax that you have to pay for having too much or too little income and too much advanced premium tax credit. So the percentages, it's a technical calculation, but the short version is that we're expecting that people are going to have smaller refunds from the advanced premium taxes that they paid. And I don't want to get too technical because it's, it's tax work. So if you were standing on your left leg and howling at the moon and the moon was behind you, and there were clouds to your right, but not to your left, right? It's that kind of it's that kind of complexity. For people who have businesses, for 2021 and 2022, if you have a business meal in a restaurant, it is 100% deductible. Otherwise, it is 50% deductible. So you want to make sure that you're documenting where you had your meals for 2021 and 2022. Again, business meals. So business meals require the 5 W's of documentation. And it's the 5 W's that you learned in grade school if you went to grade school in the US. Who, what, where, when, and why. Mm-hmm. I actually spoke to somebody from the UK and he was like, 5 W's in grade school. Who, what, where, when, and why. So who did you have lunch with, or the meal? Who did you have the meal with? What did it cost? When was it? That'll be the date. It's typically on your receipt. Where? That'll be the restaurant. It's typically on your receipt. And why is it a business expense, right? I had lunch with my friend Jack. That doesn't make it a business expense.
Right.
My friend Jack is a tax client and we talked about tax planning. Well, now it's a business expense. So it's the same thing. I often have lunch or dinner with a friend named NECA, who is a fellow practitioner. And NECA and I always talk about best practices for our business. And so having dinner with her is not deductible as a personal expense because it would be personal. But when she and I talk about best practices and how to improve our businesses and, what do you do when a client does this, that conversation makes it tax deductible. So the 5 W's that you learned in grade school, who, what, where, when, and why. I think I've told you before, tax practitioners get mad at me when I say that until you look up the tax code and you read the very complex word and I go, that means who?
That means where?
Yeah. So other things to know for this year, I wanted to talk about the dependent care credit. We recently had a client who asked, I've retired and am now taking care of, or my mother is retired, I'm taking care of her. I think actually my client retired and was taking care of their mother. So the child tax credit, there's actually a dependent care credit. So for 2022, the dependent care expense limitation is $3,000. Again, in 2021, with COVID, that limitation was $8,000 for one child and 16,000 for two or more, and it was fully refundable. In 2022, it's 3,000 for one child and 6,000 for two or more. So that doesn't mean it's 6,000 per child. It means it's $6,000 if it's, and as I say per child, notice that it says dependent care credit. So it could be that dependent could be a parent. I just say child because it's typically a child.
Right.
So the credit is equal to a percentage of expenses paid from 35% to 20%, depending upon what your income is. And if you have dependent care benefits through your employer, there are some exclusions that can be done there. But I'm not going to go into things that you would talk about with your payroll department.
So Debbie, so I guess, is it unethical to say, because you mentioned earlier that we now get 2,000 per child. So is that 2,000 plus this other 3,000?
So the child tax credit is about having a child. The dependent care credit is about care for a child that allows you to work, basically.
Okay.
Right. So I put my child in after school care, because you're working during those hours allows you to,
Gotcha.
right. We also have we also take the position that if you send your child to a summer camp and you're working in the summer, that those are tax deductible expenses as well.
Okay. Hear that, parents? Okay.
And I've had many a practitioner tell me they disagree with me, and I'm like, well, what else would you do?
Right. Yeah.
You'd either do that or you'd pay for a babysitter. And there are pages and pages. I also want to remind people who have businesses of bonus depreciation, where you can deduct, and I've got my note on that somewhere. Here it is. Bonus depreciation, where you can deduct up to 100% in year one for expenses for business assets. On top of that, there's section 179 depreciation, which is up to $1,080,000 of depreciation in the first year that you put an asset in service. So it's very funny to me because I always get people who go, well, I bought $5,000 worth of stuff, so I'd like that $1 million deduction. Well, no, it's $5,000 if it's $5,000 worth of stuff.
Exactly.
So office and home, don't forget that if you're self-employed, that you're eligible to deduct for office and home expenses. Those are a pro rata portion of the business use of your home. And it has to be exclusively used as a business space and regularly used as a business space. So it can't be your kitchen table that you use regularly, but have dinner at night. Right. So it can be your kitchen table if that is your genuine office. So if, for instance, your house is 1,000 square feet and you have a room that's 200 square feet that you use as your business office, then that is that 200 1,000ths or 20% of your expenses of utilities, mortgage interest, I started to say utilities again, repairs and maintenance, all of those would be deductible at 20%, which is, in my made up scenario, 200 out of 1,000 square feet. Alternatively, there is a safe harbor, which is you can take $5 per square foot up to 300 square feet. So $1,500 would be the maximum. But again, in my example where I said your office is 200 square feet, that would be $5 times 200 square feet. Also notice that doesn't have to be a whole room. So if I have a 500 square foot room and I'm using 200 square feet of it as an office, then I still could do 200 square feet. I don't have to use the whole room. There just has to be a section. So those are the big things. I don't know if there have any questions that have come in that we should address, or if I should keep on.
Yeah, well, one question just came up. So someone works part-time at home and she uses her office as her for her Mary Kay business.
Okay.
And so I think she may want to know, I guess, how can she use her office as a tax write-off? I'm trying to wait till the rest of the question come in. I'm thinking that's what it is, though.
Sounds like that's what it is. So because that's a side business that's not her W-2 job,
Yeah.
she can use that office and home expense to offset her Mary Kay income.
Okay.
So also notice that if your primary office is your home, that every time you leave the house, it may be a business trip. So for instance, I have an office in my home, and every morning I go on and I look at my calendar for the day, and then I drive to one of the other offices. So every time I leave my house to go to one of those other offices, that's a tax deduction. I have to document that. I was looking for my phone. I keep a mileage log. And a mileage log is really, really a simple thing to do. For me, I use Simply Auto. But you can get any mileage app off the internet, and you can track multiple vehicles and expenses. All that the law requires that you track is mileage. So you put in where you're going, and so here is my January 9th, right? So I put in what time I left my house.
Yeah.
Which is the law doesn't require. I put my beginning odometer reading. I went to the Woodstock office, and at the end it was whatever mileage that says.
Yeah.
Notice
32 miles.
my car, 458,000 miles. Thank you very much.
Wow.
So it was, it calculates that it was 32 miles, or I can't, looks like 32 miles round
32
trip.
miles.
So that 32 miles is tax deductible. Then at the end of the tax year, I go, and I'll try to do this upside down. There's a button here, and there's a thing that says report somewhere, which I can't see. Report that looks like an email.
Yeah.
And all I do is email that to me at the end of the year. It asks me for the dates, and so I put, January 1 to 12/31, and I email that to me, and that's it. I'm done.
Oh, I like that. Simply Auto. And so I just want to make sure we understand. So she can use that room as a tax write-off.
She can use that room as a tax write-off. She'll write off her, pro rata portion of her cell phone to the extent that she uses it some for business.
Okay.
Go ahead.
And I will say, and she does, I'm sure she goes to the post office and mail off packages. So that mileage would come in handy for, yeah.
It does. And notice that I also, I'm looking for it here, but I also keep track of personal miles. And the reason for that is because that way I know what the pro rata use of my business, of my mileage is. So again, using an example, assuming that I drive the average amount of miles a year in the US, which is about 15,000 miles, and that 10,000 of those were business and 5,000 were personal, I could write off 10/15 or 2/3, 67% of my gas and repairs and maintenance. I tend to, because my car has 458,000 miles on it, I write off mileage.
I know that's right.
Yeah, I've made money on my car from a tax perspective. So my car cost me $24,000 in 2005, and 90% of those miles have been written off on my taxes. So I've made, every time I get in the car, I make money.
Wow. We're catching up.
We're catching up.
we don't have quite that many, but it's up there. I think it's 239,000, something like that.
Wow. Yeah, mine's a diesel engine, so it's supposed to go that far. It's supposed to make it to $1 million.
Okay. Oh, wow.
Yeah.
Okay. All right.
That was why we bought it. We knew I was going to drive a lot. There also are electric vehicle credits that are available if somebody wants to buy an electric vehicle. They've expanded those. There are some Tesla cars that are now available that weren't available before, because under the old law, it used to be a count of vehicles, and Tesla had exceeded that count. So, but now they've expanded, so there are more. It's too much detail to go into. If you have a business and you have employee, you may be eligible for the employee retention credit. which was available for tax quarters, largely Q2 2020 through Q3 2021. I'm finishing some of those up today. We've got a client who looks like he'll be getting it back over $100,000 for his restaurants. So, so don't forget, if you have a business and you had employees who were not you or your spouse, that you may be eligible for an employee retention credit, and it's a very big deal. We've got about 6 or 7 of those that I'll be finishing up this week.
Wow.
There is the health coverage tax credit expired in 2021. So I'm not going to expound on it. That was mostly for employers who offered health coverage to their employees. And there was a tax credit available because they wanted to encourage people to offer health insurance during COVID.
Mm-hmm.
So those are the big things. As we talk about her business, remember that pretty much everything that you do that's related to your business is tax deductible. So as you look around my office, and the paper slot holder jobby would be tax deductible. Now, don't let my technical words go over your head. Now, I did not deduct the sweaters hanging in the corner.
Okay, please don't deduct the sweater. Those
But,
snacks could be a deduction, right? Snacks look like snacks.
I don't know if there's
The
snacks in
clients.
here.
Oh, okay,
Oh,
maybe something else.
Trail mix to the, but I do provide things for my staff to eat. And so those get deducted. But again, the trail mix I bought for me personally, so I don't get to deduct that.
Okay. How about cell phone? I guess I'm picking on the Mary Kay person since she was the one that said something. So,
well, that's what made me think of it. So a portion of her cell phone, because she probably uses some of it for, if she's got another job, I would say a portion. If this is her full-time job, I would generally deduct all of it. Okay. But that's an argument to be had. Remember that if you're getting Social Security, that there are, let me bounce back to if you're self-employed, right? So all of your business expenses are deductible. So change the way that you think about things and change the way that you plan, again, for that meal. Hey, Susie, would you like to buy some of my Mary Kay? Plan your trip so that you're going to the post office and you're mailing your Mary Kay stuff, not just that you're going to the grocery store. The grocery store portion would be not tax deductible, but the post office portion would be. We provide uniforms for my staff. So if I had just bought this for just me personally, you would argue that it's not deductible. But because I have a staff, it's fully deductible, no argument to be had. But I might make the argument, again, to the extent that it's a logoed shirt that is worn in public, that, at least some portion of at least the digitizing and the embroidery of it would be deductible. The IRS would argue, the IRS's position on clothing is that if you went outside naked, you would be arrested. You have to have clothes. If it's a personal expense, it's not tax deductible. Slapping a magnet on your car doesn't make your car a tax deduction, makes the magnet a tax deduction, right? Keeping a mileage log and using your car for business, but just driving around town with the magnet of your car does not make it a business trip. So for the Mary Kay lady, the amount that she pulls out for samples that she gives to her clients are tax deductible for sure. We have many Mary Kay people who say, I buy it and I wear it myself. Well, that's clearly crossing the line between a sample and a personal expense. Were you going to wear makeup anyway? I don't wear makeup anyway, right? So, but Lady Pam, you're looking really good like you do.
I wear Mary Kay. I wear Mary Kay.
There you go. So samples are, fall into that gray area, right? So, is there a reasonable amount that would be a tax deduction and an amount that would not be reasonable, right? If I've got $10,000 worth of cosmetics that I say I'm using personally, I'm going to say maybe you got a problem.
Okay.
But but a couple $100, I'd buy that all day long. Other business expenses, right? So cell phone, car, those are the big ones. Travel, make sure when you're traveling that you build some kind of business into it. So for instance, I just took this trip to Florida to onboard an employee. I wish there had been some personal involved, but there wasn't, I didn't have time. But as long as first day and last day are tax deductible, or rather are business related, then the in-between days generally are going to be tax deductible. Now it has to be within reason. I can't go down to Florida for a month and work on day 1, work on day 30 and vacation in between. But if I do, a couple of days and I go to the beach in between, it doesn't make the business trip not a business trip. So those are big things. Office and home, we've already talked about. So I'm going to go and talk about Social Security for a minute. So there is an amount that you can earn of Social Security. There are 2 components of Social Security that confuse people. There is if I am full retirement age, how much can I earn? And the answer is any amount. It will not change your Social Security benefit. If you are not full retirement age, how much can you get from your W-2 job before it starts affecting your Social Security benefit? And that answer for 2022, sorry, I'm looking at the 2023 year going, that doesn't look right, is $19,560 that you can earn, and it will not lower your Social Security benefit. It doesn't mean that your Social Security won't be taxable. It does mean that your Social Security benefit won't be lowered unless you earn more than $19,560. And again, once you've reached full retirement age, there is no limit. You can make any amount of money and your Social Security benefit will be the same. Maximum Social Security wages, that's one of the things they're talking about going up, but not horrifically germane for most of us. Boom, 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 boom. Sorry, so I shouldn't do that here. I've noticed that when my mind starts to think but isn't thinking very hard, that I start humming tequila. Do, 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 do.
Probably because you want to drink some. No, I'm just playing.
It's so funny because my husband doesn't drink at all, and I hardly drink, but that's just a catchy tune for me. Tequila. It's a fun song.
David, let me ask you this question, because there's another question regarding Mary Kay. So if they go to a conference, the airfare, the hotel, the meals, all that's considered deductible, right? The whole amount?
Correct.
All right.
But if you take your spouse's portion is not deductible unless they're part of the Mary Kay business.
Gotcha. All right.
Or your children.
Good to know. And they have to be full-time employees to be considered part of your business, like?
No, they wouldn't have to be full-time employees. They could be part-time, but they would have to be substantial. So like your kid who empties your wastebasket, right? So
gotcha.
He's not really an employee.
Right.
But it does bring up something interesting. If you are self-employed, that is Schedule C, not an S corporation, not a partnership, but Schedule C, then you can actually employ your under age 18 children, and you can pay them and set up a retirement plan for them for what you've paid them. Okay. Right. So, or you can, and it's also not subject to Social Security or Medicare. Now, if you're an S Corp, it would be subject to Social Security and Medicare, but as a Schedule C, not a C corporation, a Schedule C, you can employ your child, pay that child. You can use that money for whatever you want, but we would encourage you to set up a retirement plan for that child. Set up a Roth IRA or a Roth 401k. And get them started on the savings for retirement.
That's good.
That's pretty good. That's good stuff right there.
Yeah, that's good. I like that.
So do we have any other questions from the field? My topic is awfully dry,
No, you're fine. Nothing else so far. And I guess when you do get through, we can also talk about when can we start filing taxes? So, but you continue. I wasn't sure if that was part of what you're going to say. We talked a little bit about it before.
So we did talk about it a little bit. So the tax filing season to file individual returns opens up Monday, January 23rd this year. So that is, today's January 18th. So that is this Monday. So you can start electronically filing your tax returns on Monday. The IRS usually has a few glitches. There's a lot of returns that get held and then whooshed all at the same time. So, but they've done a better job of that. The IRS has been struggling a lot the last couple of years. As well, they, you know, I don't know, they're underfunded. The Republicans have taken control, and this is not a political conversation. This is a statement of fact.
Okay.
The House has proposed doing away with the $80 million that's been allocated to the IRS and abolishing the IRS. It's going nowhere in the Senate, but yeah, I mean, you know, there's got to be a Caesar. The government's got to pay its bills.
Right.
People are always asking me, what do you do if we go to the fair tax? And I go, well, instead of the Internal Revenue Service, I start dealing with the fair tax service. But otherwise, nothing changes in my world. The government still has to collect its money. People are still going to try to cheat. Tax returns still have to be filed.
Yeah. Right.
You can tell me all the panacea that you think you're going to tell me, but ultimately it just changes the name of something. So I didn't really, I mean, I've got lots of things I could talk about, but that was pretty much what I had prepared, because those are the big things. Remember that the ABLE accounts, which are for people with disabilities, you can now roll those. You can now roll 529 plans over into an ABLE account. I think you can also roll those into a 401k as well. But truthfully, I would have to double check. So typically what happened is, you know, if I did a 529 plan, which is a savings plan for higher education for a child, and that child aged out and decided not to go to college for whatever reason, maybe just to make you mad because you won it. But if that child aged out, then suddenly the only way to get the money out of the account would be to pay taxes on it. So now they've allowed you to roll those 529 plans over into ABLE accounts, and I think into retirement plans as well. So that's a nice change as well. Remember that under current tax law and up to and including 2025, you can only deduct a casualty and theft loss if it was attributable to a federally declared disaster area. So somebody stole my money through a Zelle scam, right? Not tax deductible until after 2025. That's unfortunate. Let's see. Energy efficient home credit. Touched on it briefly before. There are several different tax credits available for making your house energy efficient. We actually usually direct people to a website, which I'm going to have to look up. So there are credits for HVAC. There are credits for, it's energystar.gov, right? So we'll direct people to energystar.gov so that they can look into the various credits available for them, because there are so many of them. So for homeowners, there's heat pumps and central air conditioners and boilers and biomass fuel stoves, which is a big thing up in North Georgia, where you get a fuel stove that you can use pellets or wood. And I'm not sure why they're promoting that, but that is something that's eligible for a tax credit. Furnaces are eligible, water heaters, heat pump water heaters, and frankly, natural gas, oil, and propane, insulation, windows and skylights, exterior doors, geothermal heat pumps, small wind turbines. I know nobody who's ever done that. Solar energy systems are a big thing, and those are eligible for a tax credit. They tend to be expensive. You see a lot of commercials about, hey, the government will pay you to do this. I don't know that they will. They will give you a tax credit, but you have to front the money yourself.
Mm,
And what good does it do me sometimes if I have to front $10,000 and I don't get it
right,
back until January, February of the next year.
right.
But those are great tax credits that are available. And again, go to energystar.gov. We refer people there all the time to
Okay.
look that up. And let me see, what else do we have?
Debbie, is there a write-off on, because a lot of people are getting sick, have been hospitalized for COVID or whatever. Any write-offs for medical bills?
Medical bills are the same as they've been, regrettably. So only if you itemize deductions, and then to the extent that your medical expenses exceed 7.5% of your adjusted gross income,
Uh,
right? That's where the,
right.
standing on your left leg, looking to your right, moon to your
Right.
left,
With the moon to the
right?
bed.
Exactly. So that's one of
Right.
those. But insulation is a big one. You can get 30% of your project cost up to $1,200. I mean, so that's a big one that we encourage people to do.
Mhm.
Um, Exterior doors, I don't think I mentioned that earlier. So if you replace a door, sorry, I'm laughing. One day my brother got locked out of the house a long time ago. Gosh, that must have been over 50 years ago. And, and he kicked the door in, so my parents had to replace the door. So, so up to 30% of project costs. Other big ones that we see, central HVAC, that used to be limited to $500. Now it's $600 or 30%. So it's important to know that if you've already taken $500, you only have $100 left. Windows is a big one. I can't find Windows now because I'm looking for it. There it is, windows and skylights. Windows, same thing, 30% of project cost up to $600 is the maximum amount of credit. Again, that can be split. There are aggregate limits. So the overall for an efficiency tax credit in any 1 year is $3,200. So as I'm talking about this, it could be 600 for windows and 600 for insulation,
Mm.
right? So they can be added up. Bum deal, that's my tax software company calling me back to fix a problem. So I'll call them later. I don't think I've got really too much other that I can cover a
Yeah.
lot of stuff. The tax code is complex.
Yeah. No, no,
This,
this is
this
great.
book here, this is my cheat sheet, and
Oh,
you can see
wow.
it's pretty thick.
Well,
So,
Debbie, what I'm looking at, and no shade for those who do their own taxes, I cannot do it because the codes you're talking about, there's always something new coming out. And maybe people keep up with that. I just could not, just looking at that book you just kind of threw up. I
yeah,
don't know. Yeah.
and that's the cheat sheet, right? So there's the interesting bit about it, is that's the cheat sheet. One thing that I did want to mention that I forgot to, but it's on the outside of my cheat sheet, is long-term capital gains. So if you have stocks or bonds, not bonds, if you have stocks or real estate that you've had as investment property and you've owned it for a year or for over a year, then the maximum capital gain rate is 20%. The rates are either 0%, 15%, or 20%. The easiest way to explain that is if you look at your tax bracket, it's usually one lower than your tax bracket up to a maximum of 20%. So if you're in the 22.5% tax bracket, the maximum long-term capital gains rate that you would pay would be 20%, or the 35 or the 37% bracket. So those are important things to note. If you're in, however, the 15% tax bracket, then your long-term capital gain is probably going to be zero. So it is a big deal and a big thing to consider. We've had a lot of people in 2022, because the market went mad, selling their primary residence, or their investment property. So your primary residence is tax-free income up to $250,000. If you're single, 500,000 if you're married filing joint, as long as you lived in it for 2 out of the last 5 years. So that's a very big deal, and that's a lot of tax-free money. We had a guy, cracked me up, he made $700,000. I was like, are you really complaining to me? that you got $500,000 of tax-free money and you have to pay taxes on $200,000
Right.
at 20%. Are you really complaining that you had to pay, that you're going to have to pay $40,000 and you got otherwise $660,000 of tax-free money? He was like, well, I guess when you put it that way, like, yeah, count your blessings.
Yeah, right.
Count your blessings.
Debbie had another question to come in. What tax credits do first-time homeowners receive?
First-time homeowners don't actually get a tax credit. What you can get as a first-time home owner or a home buyer is you can withdraw money from your retirement plan, and I'd have to look up the amount to put down towards a down payment. But there used to be a first-time home buyer tax credit. They've
Right.
done away with that and brought it back a couple of times, but it's been gone for, I don't know, at least 5 years, I'd say.
Okay.
So, and so first-time home buyer, sorry, I'm just double checking my tax software. There is down payment assistance through the government at various state levels, but that's not what I'm looking for.
Okay.
What I'm looking for, why am I not finding it in my tax software? But largely, let me to change my search. Penalty exception, right? So I can take money out of my 401k up to $10,000 to purchase a home. That's the magic number I was looking for.
Yeah.
So I can take it out of my IRA, but not my 401k, not my 403b.
Wow. Okay.
So excellent question though.
Yeah. Okay. Thank you. Thank you, viewer.
Excellent question.
Okay. All right.
Okay.
I think that's good for the questions. Is that it for you, Miss Debbie?
I think that's all I've got. I've pulled
Okay.
all of the stuff out of my head that I think I can drop today.
Well, you did a great job. This was wonderful. Great information. Thank you. I think I'm gonna have to bring you back every January just to kind of tell us what's going on with the new tax laws. And please let our viewers know how they can reach you if they want to set up an appointment. I actually had one person text me even before we had this Zoom. They were saying, hey, who do y'all use? And I don't know if they've contacted you or not, but people ask us time to time, who do y'all use? So how can they get set up with being a new client, consultation?
The best thing to do is to go to our website at ngtaxsolutions.com. And then in the lower right-hand corner, there's a wee blue bubble that says schedule time with me. And we have a Teams, we have a new client consultation or a Teams meeting that you can set up just straight through the website, N for North, G for Georgia, taxsolutions.com, ngtaxsolutions.com. They can call our office at 770-735-3336. And also, I forget to mention that we also do tax representation. So tax representation is where you've got a problem with the IRS or with the state, and you need us to help get penalties abated or do an installment agreement. We actually just got approved a guy who owed $120,000 to the IRS. Wow. And we got them to accept, I'm trying to remember, I think it was $695 is what they accepted.
Wow. Oh, wow.
And he got to keep his house. And and we've got one now that we're working on where he owes, it's a gigantic number, like $369,000. And we're offering 900 and change. So
wow. Great. Good.
So those are big things that we do. Those are things that we do that change people's lives for the better.
Amen. That's right. Now tell me that number again. I have cell numbers, so it's 770. I'm putting it in the chat so everybody will have it.
770-735-3336.
That's what I did wrong. 3336. I got it. All right. Thank you so much, Debbie. Thank you to all of our viewers today. Listen, please contact Debbie. She is awesome. Her team is awesome. They're very prompt, on time, great service for us. So please make sure you contact them today, or, tax season is kind of busy, but contact them soon. Just for all of our viewers, listen, don't forget, of course, we have our business summit. That is this Saturday at 10 a.m. We got some great people, 7 great people. You don't want to miss this. It's going to be life-changing. We're talking about trademarking. You need to trademark your name. A lot of you guys, we're talking about communication, financing your business, a lot of good stuff, how to navigate during this inflation. So please join us. It's going to be virtual. How to grow your business, a lot of marketing tips and tools. It's going to be great. It's going to be, of course, this Saturday, 10 a.m. And then, of course, it's going to be shown virtually. We're on Facebook, on YouTube, all those great avenues that we have. See you guys in person on Sunday. Sunday, we see you at 10 a.m. at C.W. Hayes School. Look forward to seeing your face in the place during that time. Of course, if you can't make it, y'all know we are virtual as well, so you can catch us online. Of course, our prayer room call every Monday, Wednesday, and Friday. Be a part of that. Our studying the scriptures, that's every Tuesday at 7 o'clock p.m. We are journeying through the book of Jude. And then last but not least, please join us next Wednesday at 12 noon. We're going to end off January just learning how to find peace in this new year. So we have one of our licensed professional counselors, Valerie Wilson. She is going to be talking about that. So listen, great things are happening right here, of course, on Wednesdays as well. So we will see you guys then. And thank you so much, Debbie, for joining us here on today. Great information. We've been really educated and enlightened on today. And so we are going to show this again later on this evening for all of our viewers who probably were at work. But this was great. Thank you so much. I appreciate it. I know you're busy. This is tax season, so you're super busy. So I appreciate
tax season and we're busy. And Lady Pam, thank you so much. I got to say it right. Lady Pam.
You got to say it one more time.
Lady Pam and Pastor James, you guys do a great job. You're a great service to your community.
All right, great. Thank you so much. All right, take care. See you, everyone.
Right. Bye-bye.
Bye-bye.